Hello and welcome to CASA's 2026 Q1, a quarter in review, where we'll be talking through some of the biggest news stories of the quarter, and as always, how does this affect American manufacturing? We'll be glossing over some of the smaller stories that we have spoke about in the past. There'll be January 3rd, Maduro being seized by Americans, brought to New York on narco-terrorism charges, which feels like a lifetime ago, doesn't it? Things like the UAE leaving OPEC, the release of Cloud Cowork. To focus on the first story, which is certainly the notable one in the news every day, February 28th, Israel launches an airstrike and successfully assassinates the leader of Iran, Ayatollah Khamenei, kickstarting what is now known as the Iran War. In retaliation, Iran is going to send missile and drone attacks at civilian populations in Israel, but also at energy infrastructure and American military bases in countries like Saudi Arabia, Kuwait, UAE, Qatar. This is going to really start to hit Americans at home when Iran sees on its biggest opportunity. It's going to close the Strait of Hormuz, and this is going to have energy ramifications all around the planet, as this is the source of more than 20% of seabound oil deliveries. In the United States, year over year, gasoline prices at the pump are going to increase by more than 32%, for diesel, more than 52%. In Europe, thousands of flights are going to be canceled as a result of jet fuel shortages. In Asia, where many countries are dependent on imports for more than 75% of their oil needs, countries like the Philippines are going to be left with weeks of strategic reserves left and forced to call a state of emergencies. So it's yet to be seen what does the end of this conflict look like. That's something that we'll be watching very closely. On the other side, February 20th, President Trump's favorite tactic of extracting trade concessions from other countries, tariffs, is actually ruled as an unconstitutional power of the president, and they are shot down. What does this mean? It means $166 billion of money that has been collected by the federal government through these IEEPA tariffs will now need to be refunded, most notably to American department stores. Companies like Target are owed in the billions. Walmart is owed projected more than $10 billion. So we're going to have to be following this closely. Is this a windfall for the companies that they can add to their balance sheet? Will this eventually trickle down to the end consumer, as well as what does the rollout of this look like? On the other side, many of the trade agreements were actively affected by the ability for the enforcement of these tariffs. So now, given that many of these trade agreements have rates that the government can no longer enforce, given the current framework, it leaves many of these in a precarious situation where half of the trade agreement is in effect, but the other half essentially is just nullified by this agreement. So what does that look like as many of these trade agreements are whether be currently being used, but also many countries who agreed to them but have slow walked to the ratification and prevented them from becoming active, essentially in anticipation of the Supreme Court restricting President Trump's ability to successfully enforce some of these items. On the American side, manufacturing actually had a really good quarter, so we're all very happy to see that. The Purchasing Managers Index from ISM actually hit its highest amount since August of 2022, meaning that many manufacturers are recovering some of the confidence and essentially removing some of the pessimism that they had felt previously as a result of lack of clarity on tariffs or inflation or some of the other items that have plagued the United States in the early 2020s. The big item that we've been happy about is, we follow closely the employment of manufacturers in our space. In 2025, it was a very difficult year with each month having a net negative hiring rate, meaning jobs are being lost. And in 2026, much of this trend has actually been reversed. Most notably, March of 2026, it's projected about 15,000 jobs were added into the U.S. economy in manufacturing, most notably in automotive parts, as well as sheet metal fabrication, which, if you knew costs, are things we work closely with. On the other side, we're starting to see AI starting to have some real positive impact for many of our manufacturers, things like digital twin factories, the ability to see your operations through AI and test out different means, the ability to, allow, OpenClaw to actually make physical changes to your computer systems for the better. These are places that real value is being found by our manufacturing partners. So where does that leave us heading into the rest of 2026? There's a couple key questions that we'll be following. So what does the end of the U.S.-Iran war look like? How do we ensure that there is a continual access for oil deliveries to come out of Strait of Hormuz, the prevention of any tolls, as well as the prevention for the next Iranian regime to essentially restart some of this conflict and enforcing their role in the region? What does it look like for the tariff refund process? We know a lot of our manufacturers that we work with actively buy from an international supply chain, whether it be from Canada, Mexico, or overseas. Many of these people are going to be owed money as well. So what does it look like for them in the tariff refund process? The United States also in June and July will be going back to the table with its two biggest trading partners in the world, the US and Mexico, to renegotiate the USMCA agreement. So how does this transpire given that President Trump's favorite means for extracting trade concessions has somewhat been nullified by the Supreme Court's ruling? Finally, one of the biggest drivers of growth in the United States for the last couple of years has been the United States' dominance in AI, as well as advanced manufacturing. And we've run into a little bit of an interesting situation in 2026, where these AI companies have certainly grown a lot, pumped so much money into the economy, but the data centers that are necessary for them to continue that growth have somewhat declined in their popularity politically. It's predicted about 40% of data centers have either been delayed or been canceled, as the energy infrastructure necessary to keep pace with AI has simply not been built yet. So, what does it look like as the United States continues to catch up? But honestly, from the cost perspective, we're optimistic. People are making long term decisions again, people are buying, manufacturers are pumping out new orders. So, we only see a positive that can continue from here, especially where the US Iran war to settle down, oil prices normalize, and supply chains return to where they need to be. We look forward to discussing more of this in 2026. If you have any questions, feel free to reach out.